Listen closely. Capital calls right now aren't just annoying paperwork. They're shaking the ground beneath everyone who holds a stake in today's markets. If you're a founder, an investor, a leader, someone who's sweating every decision under pressure, you already feel the weight. The sudden demands for cash, the urgent emails, the deadlines closing in, they're not random. They're a fire alarm blasting through the fog of false security you didn't even realize you had. You know what's happening? Market moves triggered by capital calls are ripping apart the illusion of stability. Every time a fund screams pay up now, it's a chokehold on liquidity that forces reactions, panic sells, rushed deals, fragile valuations collapsing in real time. You sit there watching your investments, your companies, your legacies teeter, and your blood boils because it feels like nobody's actually in control. The system built around you wasn't designed for this moment. It's crumbling. This frustration, this rising, gnawing fear, it's justified. You've been locked into blind commitments, promised steady growth, while the real game, real resilience, was nowhere in sight. Capital calls are not just budget issues, not just finance. They're questions of trust, timing, power. If you blink, you lose leverage. If you hesitate, you're the prey. But rage alone won't save you. You need action. Sharp, calculated, immediate. Step 1. Stop being the victim of timing dictated by opaque fund managers. Demand transparency now. Every capital call must come with a clear, hard reason. No fluff, no hiding. Push for real-time data on where every dollar is going and how delay or acceleration affects the entire portfolio. If they can't give it, pull back. It's your cash, your future, you control the flow. Step 2. Build liquidity buffers that scare even the most trigger-happy fund manager. This means diversifying your exposure beyond traditional funds. Private equity, venture capital, real estate, mix them with quicker exit assets, secondary markets. Force yourself to always have a dry powder reserve. When that fire alarm rings, you won't be scrambling. You'll be in command, buying opportunity while others run. Step 3. Get aggressive on your capital call negotiations. This is not charity, it's business survival. Negotiate push-out periods, partial payments, or better yet, options to redirect calls into fresh investments you choose. Own your role as a limited partner fiercely. Don't accept one-size-fits-all terms. Your money, your rules, refuse to be a silent checkbook. Step 4. Seek alliances within your LP network. The isolation that comes with managing capital calls is poisonous. Find partners who are facing the same squeeze. Pool intelligence, share levies, coordinate timings when possible. There is enormous power in synchronized action. A collective, careful pressure on fund managers can bend their behavior. This network will be your fortress. Finally, the mindset shift, the biggest weapon. Capital calls aren't just a problem. They are the system confessing its cracks. See them as signals to transcend the old illusions of passive investing. Move toward active stewardship. Demand accountability. Insist on innovation from fund structures, from your own strategies, from the way you think about capital itself. Don't wait for the market to drag you. Take control and make the market move on your terms. This is raw. This is real. This is the moment to fire up that relentless instinct inside you, the refusal to be shackled by slow, outdated rules. The hunger to smash the narrative that limits growth. The courage to build a new reality where capital isn't just called. It's wielded, shaped, harnessed with precision and power. Act now. Don't just survive these capital calls, dominate them. Because in a world built on illusions, the only truth is the strength you command when the system falters. Rise, connect fiercely, and rewrite the rules. The market will listen because you won't be quiet.